What's good, YouTube? Today we're going to talk about price action and understanding the story and narrative that the candlesticks on the chart are telling you. This came from a recent person who just joined the community in my new school. The link will be in the description box below. But he said, I think one of the other superpowers that you've got is being able to look at the charts and read the story they tell. Absorption, buyers, sellers, that kind of thing. When I look at the chart, I just see candles going up and down. I have no idea why. If you could do a video sometime about what you see going on and what the candles are telling, that would be awesome. And he said he's needy, but I told him he's not needy. This is exactly what I need when I'm trying to make content for people. So let's talk about that, the price action narrative that the story is telling. And I think the best example of this would be a play that I made earlier this year on LAC, Lithium Americas. It's a stock, so some of you might be familiar with it, some of you might not be familiar with it, but the recent explosive move came because the Trump administration said that they are making an investment into the company or a stake in the company or something like that. Doesn't matter, because this was a amazing play simply because of the accumulation structure that you can see on this chart. Now, what is the primary objective of us trading? Why are we trading? We're trading to make money. Okay, cool. So how do we make money? We make money by buying low and selling high, or selling high to reback to buy low. Okay, so if we want to sell high, we have to buy low. How do we identify when something's going to go up after we buy? Well, if something is refusing to go down, that means there's a higher probability that it's going to go up. It doesn't mean that it will go up. It means there's a higher probability. We have to change the way that we think about the markets and reality in general, and change it from binaries, from either a yes or no, to a spectrum of to what degree. That's an important mindset shift. Okay, so if you look at this chart for, let's see, since August of 2024, the market put in its very last slow last August. Okay, so it stopped making lower lows a year ago. That's a big deal. That should already let you know that this isn't bearish anymore. And in fact, it had this run all the way up to $5 in November, and then it crashed all the way back down to $2.50. But if you would notice something here, every time it touched 250, it sprung out of that range. It sprung all the way to $3 and then came back to 250, sprung all the way to 3, above 3, this time went to 340, came all the way back to 250, but it never collapsed and went below 250. So that should tell you that there are limit order buyers here preventing the price from going down. Okay, market orders is what moves price to the next level, but limit orders are passive buyers that stop the price. Market orders move the price, limit orders stop the price. Okay, so there are limit order buyers at 250 preventing the price from going any lower. So I bought shares at 250 and I bought calls at 250, and I made 500% on those calls, and it was probably one of the most beautiful plays ever. So we know that the market has essentially two phases, really, honestly. Like you can make it more than that, but it's either trending or it's ranging. And if it's not trending and it's ranging, then you know that after it breaks out of the range, it's going to trend. Now, to what degree does it trend? Because remember, we're thinking in degrees now, like to what degree, not if it, if it will or not. Like it's going to trend, but to what degree will it trend? Well, because it gapped up so much and people were in so much profit, the trend as it stands right now is kind of short-lived. Like we gapped up on the 24th. Actually, it's been gapped up for a month now. So I mean, that's a pretty decent trend right there. Like it gapped up, it had two push, then it double topped at $10 and it sold off. But the beautiful thing is that this could still potentially run. Like the United States government is taking an investment in this company. So like buyers could come in at any one of these levels, 6, 5, 4, like they can come in at any of these levels and continue to push the price up. This would be a good level for it to stop at, because here's an inflection point right here. So you know it's not a very strong level. Let's see, so we do have these highs from back here, so perhaps this has been this level generally has it's not a brick wall resistance where it stopped on a dime at $6, but it did have an inflection here previously before. So this has been resistance, support, 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 support. It could potentially be support again. So understanding that if something is in a range and it's showing accumulation, and accumulation can be defined as more and more buyer participants are stepping in every time the price sells off, preventing it from selling off. We understand that. If you want to look, let me grab my arrow tool. So here's buyer stepping in, preventing it from breaking down. Here it fell below the level and it got back above the level. Every tested level went straight up. Every tested level went straight up. So we're looking for signs of accumulation, because accumulation means that the market is in a range, and if it's in a range, it's going to break out and start going to the next level. So I want to think of this as like a graduation. Like every time the market is in this area, buyers step in and buy up all the supply, and when there is no more supply in this range between $2.50 and $3, price has no choice but to go up to the next level. So we broke out, we retested the top of the range, and then it was over. We gapped up the next day on Wednesday. We gapped up. Same thing here. Check it out. Price fell below 2, fell below 3, fell below 2. Once it fell below 2, buyers stepped in and started buying up the supply. And then you can pull out a trend line tool to indicate that. Here's a low, here's a higher low, here's a higher low, here's a higher low. Okay, so when price fell below $2 and it was between $2 and $2.50, buyers stepped in and accumulated supply. And it took a bit of time. Okay, not everything moves super fast. It took some time, but you can see after buyers accumulated all of the supply in this area, price broke out, retested the range, the top of the range. So if you want to think of this as a range, right? So it broke out, it retested the top of the range. So like, I'm trying to like make this tangible for you in your mind. Okay, so there's a ceiling here. So here's the ceiling. This level right here is the ceiling. Price could not break it for a good amount of time. It tried 1, 2, 3, 4 times to break this level, and it couldn't, until there's enough demand. There's enough buyers to push it out of that range, retest it, and then they push it to the top of the next range. Okay, so we're thinking of floors and ceilings. And in fact, the most interesting thing is that it only tested this level one time. It only tested $2 one time, and it failed. This is a partial decline right here, I believe. Or is it a partial? Yes, it should be a partial decline. So that's Bolkowski. That's Thomas Bolkowski. This should be like one of the first trading books anyone ever gets. I think it's over there. Is it? No, I don't think I have it in my office. But this is an indication that buyers are stronger than sellers at this level, because price failed to come all the way down to retest this level. That indicates that there's not enough supply to push it down. Okay, so it failed to retest the level. That's an indication of strength, but it's still bearish because it's below this level. Once it break out and retest, now we have this a bullish technical event, which is a spring back test of the spring. And from a market structure perspective, it's one of the highest probability trades you could ever take. It's a bread and butter setup. It's a break. So here's a resistance, break, retest, boom. And now what is this? What is this? This is a trend. This is a trend. It's a trend within inside of a range. Okay. So understanding that is extremely important for your setups, because if you're a trader and you're taking break and retest, this is the type of price action that you want to see. Like, you want to see, ideally you want to see multiple tests of a level, because then that gives you validation that the level does indeed have limit orders there, and limit orders stop the price. And if it's been resistance, it will be support. To what degree is it support is the question. Okay, so once it broke out, it sprung, it retested, it went to the top of the range. Here's the next level. Let me clone this. Here's the next level. And there's the next ceiling. It was resistance. It broke out again, retested this level. Same thing as the first time. Retested this level. Wasn't enough demand to push it up. Came all the way back down. Retested $3 with a bullish engulfing candle straight up to $4. Straight up to $4. It probably stopped at 350. Let me see. 350. Yeah, it was a little bit of rejection at 350, but it went straight to $4, and then it went to $5, and then there wasn't enough demand to hold it here. As you can see, price tried to hold this $4 level, but it went straight through it multiple times. And then when it doesn't hold above the level, that's an indication of weakness. And it ended up retesting this level. It consolidated here for probably about a week: Monday, Tuesday, Wednesday, Thursday, Friday. Yep. So it consolidated here for a week, and then it went straight back down to $3. It bounced, and then there was again no demand, not enough demand to keep it up here. When there's not enough demand, sellers will take over, because people don't like to hold on to losing positions. They don't like to hold on to things that are losing the money. So whenever I'm rebalancing my portfolio, if there's something in my portfolio that's losing me money, if I don't like that price action, I'm gonna just cut my losses, and then I'm gonna let whatever's running, I'm gonna either add to that position or let it ride. So I entered, and in fact, I think we were pretty early into this. I might have started buying some of this here, and then when it finally came back to retest here on August, I was like, yep, it's time to buy calls on it. And then look at this pin bar. Look at this beautiful pin bar price action right here. My goodness. My goodness. Look at this. This is a beautiful reversal candle. Morningstar retest gone. And this is just the type of things that you're looking for. You want to see, if you like confirmation, you want to see a reversal candle. So this is a pin bar. This isn't a golfing candle, but this is still a reversal candle. Essentially, you just want to see that buyers are stepping in to push the price away from this level. So once again, we tested 250, we closed above it. We tested 250, we closed above it. What's next? Next is up. So we went straight up. So I hope that was like really good. I'll be making more videos on this type of stuff, because it really is important for trying to get a understanding of where price is going to happen next. Like we could even break this down over here. So price tested $9 level. It closed below it. It retested it as resistance, but then there was still some more buyers that came in and pushed it up higher. It went to $10. It closed below $10, and then it gapped down. Massive sell-off, gap down, massive sell-off, gap down, massive sell-off. So there's not enough buyers up here to sustain this price, because it's way too expensive. I mean, it gapped up, let's see, 100%. At the peak, it was up 200%, man. So it's like people are like offloading their positions to people who FOMO'd in at this premium level here. And all these people who bought here, they're now underwater. If you bought here on this day, and there had to have been someone who bought here, because for every seller there's a buyer. If there was no buyers, this would not have closed up here. These people are underwater 40%. So if you FOMO'd into the top thinking it's gonna go higher, I got some bad news for you. It didn't. So you want to buy low to sell high, not buy high to cut your losses and sell low. Okay, I know it feels strange when you're buying a dip on something and it still continues to sell off, but that's why you have to cut your losses when it just doesn't work out. You don't want to hold on to a losing position. So let me know if that was helpful. That was just a quick video on price action. Please check out the School community. I'm really loving what's happening over there. We're having calls every week. It's great, man. So I'm gonna see y'all on the next one. Peace.